Welcome to the Warehouse Bootcamp, where we provide helpful tips for entrepreneurs, owners, and managers that utilize industrial facilities in their daily business. If you or someone you know is considering making a move, taking the time to analyze whether leasing or owning makes the most sense for your business and your personal investment strategy could pay off big. There are advantages and disadvantages to each option, and some are strategic, some are tactical. Let's take a couple minutes to explore each, and in part 2 of this video series, we'll spend time on using some recommended techniques for the financial analysis. So what are the advantages to leasing? Let's check them out. Less upfront capital required. Sometimes you may wish to keep cash invested in your business rather than investing it in real estate assets. Operational lease costs are tax deductible. That's important to remember. Lease payments are operating expenses and they're fully deductible against your earnings. There's movement flexibility in a lease, so you can move between leases fluidly, while ownership is not so easy to unwind. And also focusing on your core operations. Being an owner adds a layer of responsibility that you don't have as a tenant. Leasing allows the business owner to direct more attention to operations without worrying about the facility ownership. What are the disadvantages to leasing? Well, number one, you don't have any control over your neighbors. Leasing will not allow you to control other tenants. New neighbor tenants may not be compatible with your business image, or they may require demands on your facility that you weren't expecting at all. There's also no control over your own facility, so you may be forced into a position to accept changes to that building that the owner wants but that you oppose. As an example, the landlord decides to wait another year to replace that leaky roof, but you'd like it done this quarter, since there's current disruption to your business. There's really nothing you can do to force that change at that time. Also, there's no equity accumulation or asset appreciation associated with the building. Leasing does not provide an opportunity for you to participate should the value of the building go up. What are the advantages to owning? Well, number one, control. As the owner, you have the right to operate the facility however you wish. You can invest as much or as little as you wish and carry out your own strategies related to the facility. It's also a stable investment. Overall, real estate can be a great place to invest your money in the long term. Owning commercial real estate can be an excellent hedge against inflation and a good way to diversify your investment portfolio. There's also tax benefits that you need to consider. As the owner of commercial real estate, you can take tax savings from cost recovery and mortgage interest expense during the entire holding period of the asset. What are the disadvantages to owning? Well, number one, distraction from your core business. Now, being an owner can divert your energy and take away from managing your core business, which is the primary source of your cash flow. There's also capital required up front. So the initial investment of down payment and other improvement costs can require cash that could normally be used to fund your company's operations. You should also consider risk exposure. Ownership can be subjected to facility-related risks like environmental issues, structural issues, and other building-related matters. And of course, balance sheet debt. The financial liability of a mortgage can negatively impact your balance sheet by increasing long-term liabilities and negatively affecting your debt-to-equity ratio. Lastly, the lack of flexibility in ownership. It's possible that the facility could be difficult to expand or downsize based on the ongoing requirements of your business. So in this situation with a lease, you could simply move on to the next facility at the end of the lease term. When you own, your options are a little more limited. Well, folks, that's it for today. Tune in next time for part 2 of this series, where we cover how to conduct lease versus own financial analysis. As always, feel free to visit our team website at tampabayindustrialadvisors.com.